Buying a home is a lifetime investment. It's probably the highest investment you're ever going to make. So you have to get ready for it. The first thing you need to do is look at your income, your assets, savings, money in the bank, and also what debts you've got. A very important part of this is that you check your credit report. Credit scores vary between 300 and 800. Over 600, over 700 are both good. The higher you can get, the better. I have one client that was 820, but that's very unusual. The majority of our clients are around 650 or above. So that's something you have to look at and work on if there's a problem with it. The biggest thing that people have as a detriment to their credit is that their credit card balances are too high. And that's something that's a relatively easy fix. Stop using them. I know that's hard. Or pay extra money on them every month. Not easy either. So that the balance is only about 50% or lower of what you could borrow on that particular card. This will really up your credit score in a short period of time. Of course, if you're behind on a card, needless to say, make an extra payment and catch up. The other thing you need to do once you've done all that and worked on your credit is to get together documents. Your loan officer will need the last 2 years' bank statements, the last month's payment statements. That could be one payment statement or two or four if you get paid weekly, and also your last 2 W-2s. I know all this sounds very intrusive, and it is, but that's just the way it is with loans these days. The only way to get out of that is if you've got a big amount of money to put down, say at least 25 to 30% or more, and you don't mind paying a higher interest rate, because you will be paying a higher interest rate in those circumstances, because then people won't be checking your documents, or you won't need to produce as many. So there are a variety of loans, but all of them you've got to get ready for. You've got to know where you stand. Before you meet your realtor is a good time. When you meet your realtor will help you by getting you pre-qualified. You can always, of course, choose your own lender by law, and the realtor will recommend several good lenders that they find are extremely competent. Now, apart from all that, once you know what your payments are going to be, which will then lead you to what your loan amount will be, then we'll be looking at houses. And the typical time for this, from when you start to when you close on a house, is like 30 to 60 days to find a house, and another 30 to 60 days to actually close. So you can put that into your database. That's a 4-month period at best. You might want to start earlier than that in case you have trips out of town and you can't look on a regular basis. The other question people ask me is, well, how much do I offer? How much you offer depends on what part of the country you're in and what the status of the market is. Here in Northern Virginia, the status is that it's a seller's market. So that means that buyers are paying full price, or if there's several offers on the table, over full price for a particular house. Most buyers find that very hard to swallow. So just be aware of that before you get started.